Honors Econ. Hope you guys are good. We're gonna get into insurance today. So in your notes, you could just title this insurance. I'm right off the what the state gives us for the teacher notes for you guys. You're not gonna write all this down. I'm gonna talk. I want you to just summarize some of the key points that I make, and then you'll add that to your notes, and then you'll turn those in this Friday. All right. So list and describe various types of insurance, such as automobile, health, life, disability, and property. All right. For any of you guys that drive, you know that in the state of Georgia, you have to have auto insurance in order to drive. The required coverage is what's called liability insurance. All right. So this is key. So this liability insurance. All right. Liability insurance covers the other vehicle. All right, when you're at fault in a car accident. So I want you to write that down. Liability insurance covers the other vehicle or vehicles when you're at fault in a car accident. It does not cover you. So in Georgia and in most states, you have to have liability insurance, but you do not have to have what they call collision insurance. Okay, collision insurance is if you want to cover your car, even if you're at fault, and the other people's car. The liability insurance is cheaper, so a lot of people, especially young people, will just have that liability insurance. However, as people get older and they're able to afford it, they will also get collision insurance as well, so that if they go and total someone else's car and they total their car and they're at fault, it will cover both the other person's car and their car. All right. If you get a loan, you don't need to write this part down, but if you get a loan from a bank to buy a car, they may make you required to have collision insurance, okay, until it is paid in full. All right. So if you own the car outright, all you're going to need is the liability insurance. However, if you do not own the car outright and you've gotten a loan from a bank, the bank may require that it has collision insurance on it. All right. Okay, health insurance pays for medical services. Most of you guys probably know what this is. All right. Federal law as of April 2017 requires us all to have health insurance. Otherwise, we have to pay a penalty. You can get kind of cheaper health insurance if you are, say, working a job that doesn't offer you health insurance through your employer. That is called catastrophic care. All right. That is like, okay, you've gone out and let's say you got into a car accident. You don't have health insurance, but you have catastrophic care. It would pay for that catastrophic incident that happened to you, that car wreck. So let's say you broke a leg or something like that in that car accident, the catastrophic care would come into play. That's going to be cheaper. The reason being is it's not like, that's not something that happens every day. Catastrophic care, though, would not pay for something like if you go to the doctor because you have a cold or you have the flu or something like that. All right, so catastrophic care means something catastrophic happened. It'll cover that, but it's not going to pay for routine, what they're saying are routine wellness visits. All right. Now, as you get a job with an employer and they offer you health insurance, that is then where you pay a premium, and then that pays for those routine wellness visits. Okay, life insurance. I usually have to explain this to kids. They don't really understand what this is. Life insurance provides a monetary payment to a designated beneficiary when the insured person dies. Okay, so for example, I have life insurance for my family. My beneficiary is my wife. So if something happens to me, okay, I die, $500,000 is going to be paid to my wife. All right. I have to pay that on a monthly basis for all of this health and for all of these insurance types, whether that's automobile, health, life, what we're going to get into, disability and property. You pay a monthly payment in order to have it. That's called the premium. Okay, so I pay a premium every month for my automobile insurance, for my health insurance that comes out of my paycheck, for my life insurance. I pay that to USAA. That's who I have it with. I pay $22 a month in case something happens to me. And then my wife would get that $500,000. Okay, so I pay that monthly premium of $22 a month. Something happens to me, $500,000 gets paid out to my wife. All right. Disability insurance. Okay, so this is like those Aflac commercials you see on TV. Provides people with income in case they become injured or unable to work. All right, so it's not health insurance. It's not like they're going to pay to get you well. It's you can't work because you hurt your back or something like that. You're not getting paid. Well, you had that disability insurance. Maybe it's through Aflac, and now you make that claim, and now they pay you. All right, they pay you for that income loss, being that you're not receiving a paycheck. Okay, property insurance. Property insurance takes a variety of forms. The most common types are homeowners and renters insurance. Okay, so I have property insurance on my house. I make that payment every month to have this insurance. So we had tornadoes the other night. If a tornado came through and just ripped up my house, I would make a claim with my property insurance company. It's USAA as well. And I would say, hey, my house got damaged. You guys need to come fix it. And because I pay that premium every month, they will now come fix my house. All right. There's also other kinds of property insurance. For instance, we have property insurance on my wife's engagement ring. The reason being that that's it's worth a lot of money, thousands of dollars. So if something happens to her engagement ring, they would pay us the money for that. I also have property insurance for any other valuables like inside my house. Okay, that is included in my property insurance that I have in my house. All right. Renter's insurance will protect your personal property if you're renting a property somewhere. All right. So let's say you're renting a house and you're storing a lot of things in the basement and the basement floods and some of your property gets destroyed. You would use your renter's insurance to make a claim. All right, that's it for today. I just wanted you to get down those 5 different types of insurance. All right, so your automobile, your health, life, disability, property. Put the closed captioning on the video, and you can summarize what I say. You'll turn in those notes Friday. We're going to do a quiz on Friday. Hope you guys are good. Talk to you tomorrow.